And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Limit Up Podcast. I am Dan Hodgman.
And I am Jack Pelzer.
Jack, we've got ourselves an interesting week here. We were talking about it last week that, we thought maybe a little dead cat bounce come Friday. Volatility's all over the place. We got stocks up a couple percent, down a couple percent, all over the place. You got oil moving. What a week.
Yeah, I thought for sure. So I was wrong on the dead cat bounce Friday. I was looking good at the beginning because I saw it open up low and then get above water, then kind of sell off a bit. But man, Monday and Tuesday, that was no joke. Those were two straight 90% plus percentile up moves in stocks, followed by a lot of volatility. I think we're just trying to, I don't know.
We got oil too. Oil's the one, and I know I've talked about it. And I'm beating that drum a little bit, but oil has really been a market I've been extremely active in over the last probably 3 or 4 years. I'm an equities trader by trade. I've always been in the equities. I've never really been a big commodities trader, but oil has kind of had my special attention for the last few years. And because I found some great opportunity and I've been trading it quite a bit, and I have been blown away by these moves. Really great opportunity, definitive moves off levels that I like to look at. And it's been an interesting one. Now, I'm not crazy that oil is back up and gas prices are going higher, but
now are you looking, do your levels at all change now that there's been a difference in supply from our very good friends and allies in Saudi Arabia? Thank you, Saudi Arabia, the best friends you could ask for.
I got that notification the other day, and let's just say it was bleepity bleep bleep bleep. I was frustrated, and then and there's so much involved in all of it, but I saw that and I instantly knew, okay, I'm going to look for rotation back higher. I'm going to look through the levels that we talked about last week, right? A couple of weeks ago, I've been talking about that 95 price point for the last 6 months. Obviously an area I'm going to keep an eye on. We got news, yesterday, this morning, last night, whatever it was, that Biden's going to kind of try and release some oil there from our reserves. So let's see what happens. But yeah, I mean, they're making money on this, right? Like it's a lever.
Saudi Arabia making money. Yeah. Like it's kind of what they do. I think it's important too. This is where, remember too, like still the energy is going to go higher, but with all this, there's so much a difference now between the energy situation in Europe and the United States, for instance, that now's an important time to remember exactly when you're trading a CME CL contract, you are trading the oil delivered to Cushing, Oklahoma. The other contract for the Brent crude, I believe, is delivered off of Scotland somewhere up there, right? And that's the stuff that just know that those two are certainly not interchangeable, right? And different things will affect each of them to orders of magnitude. So in this case, I just wanted to get that out there, but continue, Dan.
Yeah, and I'm not going to go down the crude oil price decision, and there's a lot of political opinions related to that. There's a lot involved from a trading standpoint. Just know there are so many factors that can influence directional moves on this. Set your political biases aside when you're trading these types of things, right? Like define your levels and trade off of them and be quick to be in and out, be out when that market comes against you. And that, that's really what it comes down to. And I think we talked about this, Jack, recently about directional moves on the coach's playbook. Like whatever your bias is, forget about that Like you have to get rid of those things when trading these markets.
I've talked about this before, but that's sort of what has soured me, where I don't trade a ton of oil because, I mean, there's huge headline risk in stocks and stuff like that. And I'm sure there's some degree of insider information and things like that. But there's nothing like when you have an actual cartel of, not the people on the most up and up in the OPEC that can essentially unilaterally control price moves. And, bet they weren't on the wrong side of hedging that futures move. I'll just say that.
There's a very good possibility. I mean, they've got big contracts with Live Golf. Maybe they got to pay some contracts. I don't know.
Have you heard about the concept of, this is good because, we're coming up on the World Cup in Qatar, which is another,
You said it correct.
I know. I've gone through, it's taken me a long time to figure it out. I watched a video on it. World Cups in Qatar. And with the Live Golf thing, this, are you familiar with this idea of sports washing?
Yeah.
Yeah. It's in full thing. I wonder, where this goes. And like, for instance, like with my beloved Chicago Bears, are they going to get bought by the Saudi royal family or something? I mean, I'm not a big fan of the McCaskies, but that'd be sort of a bummer.
Well, McCaskies are making moves, moving out to Arlington, increasing the value of one of the most valuable franchises in the league as it is. They're establishing everything to set it up to move it and sell it. Who knows?
Yeah, I'm hoping for Bezos. I will change my opinion on Amazon if Bezos buys the Bears. Listen to that, Jeff.
Well, maybe we should talk markets a little bit. I'm going to finish running through what we got
course.
going on here today. We had a little bit quieter day in the equity markets. Both S&P and NASDAQ opened up right around settlement price, just below, tested up above, but continued this back into the downward trend there. Gold continues to weaken. Another flat day. I'm going to call today a relatively flat day. Opened up just above settlement price and then spent the day up and down from there. Euro way down, continues these downtrends each of these the last 2 days, and the 10-year note, no surprise, down.
Yeah, absolutely.
Yields up, notes down.
Yeah.
So Jack, we're in Q4.
Yes, we are. It's the beginning of October.
End of year is approaching. I like your topic for us today.
Yeah, I thought we could talk a little bit. This comes from a blog we have on the Top Step site about how to get ready essentially for the end of the year in Q4. And I think that there's a lot of practical considerations that go into it besides just, figuring out your taxes or making absolute sure, say you're trading stocks, that you have enough money to cover your taxes, that you're not just reinvesting or retrading that stuff. But there's also a huge amount of a psychological aspect that goes into it. And I would like to start with sort of a personal story of how there are certain traps you can fall into. And for me, the biggest one is I would always start my trading year pretty wildly optimistic, no matter what was happening going into it. I would have a number in my head that I knew I could get to that year. And because I was wildly optimistic, and the definition of wildly optimistic is usually that you'll be disappointed, right around this time, it would become increasingly clear that I was not going to get to that number. However, I really wanted to get to that number, and it started to change the way that I traded. October is traditionally a pretty volatile time of the year. And maybe I would trade, shall we say, a bit recklessly to try and get to a number that wasn't that realistic to start with. Is this something that rings true to you, or are you much more of a sensei than I?
Slightly different. So I had my number at the beginning of the year was minimums. What I needed to, even to this day, right? Like, what are the minimums I need to be making to justify what I'm doing? But I always, it's pretty much anything in my life, like, to start things off, I start really strong. From working out, my first mile on a run to first quarter of the trading year have always been, two quarters really have always been my most successful. And I catch myself going, okay, walking into Q4, how much have I made this year? Divide it by 3. And that's what I'm going to make this quarter. And I I've done it a million times where I walk into Q4 thinking this is what I'm going to make. Now my vacation time increases in Q4. I like to take typically the last 3 weeks to a month of December. I'm not doing really anything. November, we got Thanksgiving week. I'm not doing anything there. The beginning of October is my birthday month. The birthday comes into the beginning of October. So not doing a lot around my birthday, going on vacation next week. So I'm trying to tell myself not to do what I've been doing for like the last 15 years of coming into Q4, thinking I'm going to do what I did in Q1, 2, and 3 and avoid it. It's going to be hard because I've already done the calculations.
Yeah, it's almost always going to be difficult to do that over the holidays because it's not just you. As people forget sometimes when you make your projections on these things, that I used to shut down my book for the year after the first or second full week in December. And that was relatively common because markets will thin out incredibly, liquidity will disappear. And because of that dynamic, you have the tendency for some really odd moves. Like it seems so quaint now after a world pandemic and, you know, a hot war in Europe. But do you remember that, what was it, 2018, the Christmas plunge or whatever?
December 23rd, 2019. I thought it was 19.
Sure, I'd believe it. But basically there was a, temporary huge sell-off for reasons that were not entirely clear. Probably has to do with some tax losses, things like that. Like in the market now, especially this year, I wouldn't be surprised if we could see, everyone's negative now. We could see a temporary bounce on something as simple as tax loss harvesting. There's a lot of stocks that are in the a lot of investments in general are in the red right now. And if you lock in that red print, you get to write it off your taxes. So there'll definitely be a lot of funds that are doing that. Basically, there's a lot of different forces working now, and they get less predictable later in the year. October is really, I think, the last completely normal month. And I think that's what makes it historically more action, right? It's kind of like your last month to trade normally.
Yeah, I think so. That's why it's always been such a volatile. We've historically had a lot of things happen in October. If we wanted to go back in the history of the stock market. But you're spot on, Jack. I mean, come November, everyone's starting to think, get out of here, holidays, kids, what happens always like in the beginning of November, there's fall break from school. So, kids are taking time off. I know for a fact, I mean, my dad was a relatively large treasury trader for his entire career. And the first-ish week of November, every single year we were on vacation. So it's like everyone starts to take that time off. And so if you get through October, that's really where your focus has to be. Like if you haven't hit your numbers by Halloween, you don't plan on hitting them over the next couple months. Yes, still trade. I'm not saying don't go about it, but manage those expectations. I apologize. There is a train going by. I know last time we couldn't hear it, but I'm going to say it again because it's in my ear.
So look at me. I went into a different room today, so there'll be no train noise. It's going to be eerily silent here. So I think that it ties into the general trading FOMO people have, but I think it gets worse. Is I do remember that there was that feeling that it's now or never, and sort of like a player in the NBA or something who might, start chucking threes when you're down 20 or something like that. I think that that's the wrong attitude to have because unlike sports or something like that, there's degrees of winning and losing. Like you can pursue. So like that idea of chucking when you're down 20 in basketball, that's pursuing a high variance strategy, which is fine because it gives you a better chance of winning, of making up that 20. And it doesn't matter if you lose by, it's still just a loss. That's not the case in trading, where if you do the equivalent of chucking to try and make up on lost time, you're just making a bad decision. You're pursuing a high variance strategy that is not part of your strategy. So one of the things from the blog was basically at this point in the year is not to change things up. Whatever's working, stick with that for the time being, because now is not the time to go out on a limb and start messing around trying to find some secret sauce.
It's interesting too, Jack. I mean, that's a phenomenal point because you can't just start chucking things and hoping something sticks because the losses are real. That's money and coming out of your pocket. Um, the one thing I also will sit here and say is like, yes, we have to, as from a business standpoint, from taxing standpoint, IRS, all that, we have to think about things on a yearly basis. But if you come into Q4 of the year thinking like, I have to knock it out of the park here, you're forgetting that January 1st, we're going to be back at our desk trading again. If that's not your mentality of like, I want to be here in January for Q1 of 2023, then yeah, go ahead and start chucking and see what happens. But if you want to be here in 2023, don't, as Hogue always says, risk thy whole wad to end the year. It's not worth the risk. Sit back. Don't think you're missing something just because the market's moved.
I still think that in a lot of ways, besides taxes, which are very real, that time periods as far as trading are kind of an artificial way to judge your progress, where unless there's some incentive to make X amount of money in X amount of time, it's really, you should just be continuously trying to improve, continuously evaluating yourself and slowly sizing up, regardless of what that means for your week, day, month, etc. Like you still should have loss limits and things like that. But I don't think the changing of the year, like the only thing that should affect your trading is the changing of the markets, which will happen at the end of the year for a lot of reasons we mentioned. People will be off. It's the holidays. The markets are thin. That's a good reason not to trade or to trade less. But just the fact that the same applies to when you come back January, I guess it'd be 3rd this year. New Year's is on a Sunday, so we get the 2nd off. You come back January 3rd this year, same thing. Don't get into the FOMO right off the bat. Just keep on improving on what's been working. Just use some of the time off to evaluate what has been working so you know what to do.
Yeah, and we've created these trade plans like over times, putting many hours into it. Stick to what the plan says. If the market's not reacting how you're looking for it to react, step out, right? The only thing that we cannot control what the markets are going to do. So it's, yes, we can totally think about how much money we want to make, but the market's really going to dictate that. And if the market's not trading in a way that we're going to see those profits that we, would like to see, doesn't mean you have to size up and start, like you said, chucking threes to see what happens. Stick to the strategy, stick to the plan, and take what the market gives you, because you want to be here when the market is firing in a way that is comfortable with your strategy. And your strategy, you're hitting everything that's coming your, every low inside fastball, you want to be crushing each time as it comes in, when your strategy's on fire. And when it's not, don't push it. Don't think you have to make anything.
To bring it back to the current market state right now is, okay, it's October 6th right now. Tomorrow's Friday. The markets are in flux right now, where when we talk about what the trends are, we always talk about, trend being your friend, or like trading the momentum and things like that. There's been a pause in that. We've clearly been for a long time in a generally downward channel in the equities. After the last 2 days, or after Monday and Tuesday this week, I was expecting a sharper reversal that hasn't really materialized yet. So I'm kind of looking at this of, how do we evaluate that as far as the trend? Like how are you looking at the trend in equities right now, Dan?
Confused. That for me is really where it stands. Obviously, like big picture, I'm still in a downtrend on this. I would agree with you. I would have expected a little bit sharper downturn, but I also think like there's so many factors weighing on what's going on right now in these markets, like the Fed, closed door meeting, which really nothing to worry about there, but those types of things that are happening, paying attention to that type of stuff. I'm kind of curious to see where midterms go, right? We're coming up to midterms. That to me is a really could have an impact on this. I think people are kind of sitting in the same boat as I am, just a little confused, not really sure where it's going to lay, what's going to happen. And so I'm going to just let this thing go sideways until we get a little bit more information. That's what it's waiting for. I think it's waiting on a lot of information.
Which, speaking of which, brings me to my next point. 1 week from today, CPI. So that's why I'm looking for, I have a bias towards the range trade between now and CPI, because it's like the moves have been made and we're waiting for that next big piece of information, and something, something unusual could happen, like what happened, what was it, last week, when the British Prime Minister came out and decided to, do the opposite of what their bank was doing.
The extreme something budget or whatever it was.
Yeah, they had to walk that back a little bit because that was a big swing. That was a high variance strategy right there to do it. I think they have walked it out. It was even crazier with, I did not know this, Dan. Were you aware that they don't do fixed rate like 30-year mortgages really in England? Like they're all adjustable rate mortgages. So
I've heard stories about buying a house over there and like getting mortgages and how difficult it is. I'm glad I'm not there.
That definitely seems like something they might want to reevaluate. Obviously, it protects the banks, but man, that's a real, say your interest rates get real high. Seems like a good way to just make everyone homeless if you got like a
right. It's like
5%
you
mortgage
budgeted everything,
14%.
Right? You budget everything on the 2.5% mortgage rate that we were all seeing like a year and a half ago. And then all of a sudden you've been at your house for a year and a half and now your rates are 7.5%. Like, ooh,
yeah,
that would suck.
Yeah. So here we are, Dan, back at 37.50 in the ES, right between where our bet is going on here. Yeah, I like between like to buy between the 36.50 and 3,600 area, and then probably sell around the maybe the 50-day moving average up there around like that big fat number 4,000. But like I think until CPI, I don't see a whole lot that's gonna crash this or bring it up.
I think you were spot on 2 weeks ago when you were, I think, was it 2 weeks? Maybe it was last week. We were looking at it. We were right down at that 36.50 low. What was that, the pre-COVID, post-COVID?
Oh, 36.50 was the previous bottom,
right?
And
right,
like from when it went down. The COVID, that's the bigger one I'm looking at. If we keep heading lower, that's at 3,400, I think.
Okay, that's right. Yeah, so we were at 36.50. I think you got a nice move from that. I think that has to do a little bit with what we saw with this bounce on top of a million other things, right? I have nothing right now. Like for me with these markets, I'm really just like trying to keep my stuff as simple as possible. Sit down in the morning, where am I at, and focus on those high probability setups for me. And everyone knows my biggest one, if the market opens away from settlement price, I'm looking to see the market rotate towards settlement price. I don't think there's any hiding that move and that strategy for me. It's been successful for a very long time. That's usually how my days start, and then I'll go from there.
I'm trading small, I think, in the range that I was describing there, and then taking a pause to see it establish a new trend, which I think comes at CPI next week.
Which I'm curious, Jack, how do you think CPI is going to go?
It's such a wonky number, and it's kind of whack-a-mole inflation around the economy, where now rents are the big story. Now it was fuel prices, goods prices and fuel prices have come down quite a bit, like shipping, supply chain stuff. But now, as the interest rates go up, the rent goes up quite a bit. Which wins? I don't know. That's why the number is so volatile. That's not a number to trade through.
I've been paying really close attention lately to like my everyday costs. I will say, obviously, gas prices up. Beef, I bought a ribeye at $26.99 a pound the other day, and I've been paying $29.99 a pound. So that was down, which was nice to see. I was at the car dealer, was shopping for a new truck. And I decided not to buy a new truck after seeing the new prices of them and their market adjustment dealership fees of ridiculous amounts of money. So those are up. So I've been trying to pay closer to, and my eggs are more expensive than historical. So
It'll take
I don't
some
know.
time to figure
I have
it
no
out.
idea what's going to happen.
Because remember, companies will want us. They're a little bit resistant. Like the second that the goods prices shoot up, they want to make sure they're not selling them at a loss. But then they'll want to sell them. They want to sell them at a higher price as long as they can. So it
it's
takes
like
some
the gas
time.
stations. It's gas stations. You see it very quickly. When oil goes up, the gas prices follow really, really close. When oil starts coming down, they take a long time to start lowering those prices. They kind of milk it, for lack of a better term. They'll milk those higher prices as long as they can until they have to start coming down. And
that's capitalism, baby.
I get it. I would be doing the exact same thing.
Cool. So Dan, I think that's where I'll leave it for now. You got anything you want to add there? Or else we could talk about like the new developments we teased last week with Top Step.
I think we got to talk about those.
Yeah, we do. So if you're a funded trader, you go back to step 2 now. No more step 1. You get funded. You are done with step 1. We're essentially a 1-step program. So if that applies to you, what should they do, Dan? Email support or
support at topstep.com, or give us a buzz, 888-407-1611. Amazing. I still remember that number. So better than my own cell phone number.
You got that number down. I can't remember my wife's number because we met after, like, you would just put
you could save a number.
Right. It's like, why would I?
I know my phone number, my parents, obviously my blurriness there. I'm back. My parents, I know my grandfather's house phone, and that's it.
I know a bunch of friends from like grammar schools that their parents don't even live there anymore. But so
I got really good with 1-800-CALL ATT, and then doing the quick, Mom, finish hockey practice, come pick me up. Bye.
Nice. Well, don't do that to us if you want a new start step 2 of the combine.
Absolutely.
Email support.
And if you've been at Top Step and you haven't been here in a while, but you were funded previously, you still have some time to make sure you sign up and can come back and start right at step 2. Pretty exciting stuff. So I'm excited about it.
Well, thank you, Risk Manager Dan, for that. That is all then for Limit Up this week. We'll be back next week. I'm kind of enjoying doing the podcast from here. It's quieter. There's no train. So
Dan will not be back next week. He's taking a vacation.
Oh, yeah. Well, then either I'll be here with Doherty or we'll see you in 2 weeks. That's the way the cookie crumbles. Have a great Friday. Have a safe weekend. Trade well. Stay safe. Namaste. And I already said trade well, but do it anyway.